Hi, this is Drew Tignanelli. This is our December update, but it's actually coming to you the day before Thanksgiving. We just wanted to say happy Thanksgiving, and we are thankful to you and all the viewer support, and just give you our update for December. You know, in the sense of the markets, they're, you know, again, you still hear markets hitting new highs, but it's like hitting new highs on like 1 point days.
Yeah, every consecutive, and it can go up 0.01% and it'll be up at a new high.
And the media will say, you know, new high in the market and so forth. So, but it's a very mixed year, and it's been a mixed year. The dollar is still strong and getting stronger, though there's a lot of mixed signals because commodities have fallen off the cliff. That's a good thing for them, you know, off the cliff. But the you know, the interest rates are going higher. Now, you would expect that to go opposite. You know, if commodities are going down, you'd expect the bond market to come down, especially since Europe and Japan are so interest rates. Actually, Italy and Spain are paying less in interest today than the United States on 10-year bonds.
Yeah,
now, it's
amazing.
hard to comprehend that somebody would sit there and say, well, the dollar's going higher, the U.S. is a lot stronger, but I'll buy Spanish bonds.
Right.
You know, I'll lose money to the currencies, and I'll take the chance that Spain won't repay me, and I'll take a lower interest rate, and I'll invest in Spain.
Yeah, and we've also had the news, the data came out on Japan being in recession.
Yeah.
You know, so they're looking to, like, how do they get that economy going? It's been over 20 years, and they just can't seem to get out of the muck.
And their 10-year treasury is at 0.5%. And our 10-year is at 2.35%, and yet Japan is printing money even faster than the United States, saying, we're going to do whatever we have to create inflation. Now, that just doesn't compute, you know? And actually, Japan is buying securities in their stock market to drive their stock market, to try to drive. I mean, it's just craziness what the central banks around the world are doing.
Right. Yeah.
So, anyway, I don't think there's anything more to update on in the investment world other than, you know, there have been a lot of mergers and acquisitions, and we've benefited from that because we had a bank stock that got taken over in our portfolios, and it was a nice little bump. You know, it was a very nice bump, and we had a couple other stocks that, you know, were up back toward what we were expecting to get from them, and we sold those stocks and rotated in some other new things. But it's just.
Well, the question is what do you do with capital, right? And that's what we're seeing, because the M&A activity has been broad-based. We've seen it in energy, we've seen it in banking, we're seeing it in just different, you know, in healthcare, we're seeing it there. There's been, you know, some debates about, you know, this foreign acquisitions and, you know, taking the money across the pond. But when cash is at zero for so long, it's burning a hole in people's pockets, and they're trying to figure out what to do with it. And
how many clients have we had call us up and tell us, maybe I should be a little more aggressive?
Right.
You know, and that's usually the worst time is to want to, you know, you're supposed to be aggressive when the markets are way down and be conservative when the markets are up. But, you know, I can't tell you how many times I've had to answer that question in the last, you know, year or two, especially. Maybe I ought to be more.
I answered
more
that question last night with a client that was concerned. You know, the markets are hitting new highs, and they get all excited about it. And the other thing we were talking about is that it's not just the U.S. markets. You know, or it's mostly the S&P 500. Because we're not seeing it in the small cap, the Russell 2000. The international markets is a variety of returns, emerging versus Europe, you know, and the like. And then, you know, so it's just really varied depending on where you are. So when you talk about the market, as you said, the media blows it up. Oh, the market's hitting new highs, but it's really not the whole market.
Yeah, and let's just hit some financial planning topics because December is a critical time of year. So you've got the required minimum distributions, and our team is down to, I think, just 40 or 50 clients that haven't taken their required minimum. So we've got that pretty well under control. But if you feel you need to, make sure you contact our team at 410-823-7283 and ask for either Derek or Michelle, and they'll take good care of you on that. We're going to do some tax loss harvesting. So we've had some of these gains, like this bank that got taken over, and so we've got this gain that we're going to pay taxes on. but we also have investments that if we sold them from a tax point of view, we would be able to report a loss. And that's sort of a unique feature with mutual funds. You may have made money on the fund, but from a tax point of view, it's, and I'm not going to go into the reasons as to why that happens, but you're going to see a couple mutual fund sales where we're going to do what's called a swap, so that we can harvest that loss without leaving the investment out of the opportunity that might be ahead.
Yeah, we'll stay in the market where we want to be, but take that loss to minimize the tax impact for the next year.
Also, charitable giving. So charitable giving is very important this time of year. You have to make your charitable gifts before December 31st. And if you're going to give stock, we need to know before December 20th. December 20th is the operative. 20, not 30, 20th.
That's right.
So that we have the time to get the paperwork into your hands to sign and to the charity. You know, so please give us a call if you want to do any charitable giving before December 20th with giving stock away to your charity of choice. Also, if you're doing non-cash, and I'm talking about goods, you know, like you're going to give a car away, you're going to give clothing away or furniture, it's very important that you keep itemization of what it is that you gave away. One of the great programs to use is It's Deductible. Online, it's free. You can say, you know, I gave a pair of pants away, we're in good shape. They were cotton pants. You know, I gave a t-shirt away, it was in terrible shape. And it will figure out exactly what that item can get as a deduction from an IRS defendable position. And that's very important. So you need to get that in, you get your receipts and do your itemization before you're in. I'd also suggest taking pictures. I take pictures of everything I give away, and I've given a bunch of stuff away, and I take pictures of it and I store it up.
When you go to Goodwill, right, they give you just a generic receipt. Sometimes it's just sitting over there and you just take your own receipt and there's a date on it. And they mark one bag of something, and so. But I actually print out the It's Deductible list, and then I say, okay, everybody, you know, let's go through the house, and you know, 27 T-shirts, and they're good, and whatever, and at the end of the year, it just goes right into the program, and it kicks out the numbers. So, and it's pretty significant deductions. So
it is.
Take advantage of doing that.
The last thing is I wanted to talk about something on our website. Our website has a new education center that Molly Burden, one of our young up-and-coming stars of our firm, had put together with our web designer, Heidi. And they did an excellent job on this education center. You can get our old radio shows. You can get, you know, an archive of all of the articles we've written and all new articles. There's a lot of other really good things on that education center. And don't forget on Twitter, @TheFinCon, @TheFinCon if you want to follow us and all the articles and other events that we're doing.
And we let you know about the radio show and maybe who our guest is and what's going on. We remind you of those things and send other tidbits. So it's great. Follow us on Twitter @TheFinCon.
Yeah, I think we ran a little longer this time, but I think that's good because there was so much good stuff to share. This is Drew Tignanelli saying God bless.